top story. The World Bank sees a deeper contraction for the economy this year and a slower recovery in 2021 amid struggles in handling the pandemic. The multilateral lender now expects the economy to shrink by 6.9% under a baseline scenario to a deeper 9.9% under the low case scenario. The updated outlook is lower than the World Bank's initial contraction estimate of 1.9%, as well as the government's forecast of negative 4.5% to negative 6.6% growth. The country is likely to face what the lender calls an uneven and volatile recovery as COVID-19 infections continue to rise. As of September 29, the country's caseload has topped 209,000, the highest. Sorry, let me correct that. It's 309,000, the highest in Southeast Asia. The World Bank says the return to pre-COVID level in the country will likely happen by end of 2021, saying the pace is slower than in Indonesia, which has over 278,000 cases. In Southeast Asia, only Vietnam and Myanmar are expected to see growth, with the ASEAN region expected to contract by 3.5%. The World Bank also said the crisis will create a class of new poor, or people who have unexpectedly fallen below the poverty threshold due to the health crisis. All right, Dan, we may be facing a volatile recovery, but our regional giant is showing signs of a bright outlook. Tell us more about those fresh from the oven PMI figures.
Okay, so these are relating to China, and a lot have been focusing on this because just as you had reported, Jess, domestically things seem bleak. But if we are able to get some spillover effects from China, then that might be a positive thing, right? And you can see on my terminal here, basically the title of Bloomberg's report is Getting Stronger, and this is China's Manufacturing and Services Firms Index. And from that V-shaped contraction that we saw, which was just between March, just before March, at the height of the COVID pandemic, you can see a very sharp V-shaped recovery and still going upward, at least in a sort of upward trend above 50. Now, anything above 50 is a good thing. Basically shows that it's expanding compared to the month before. So what's the real figure here? September, the Manufacturing Purchasing Managers Index was 51.5 from 51 a month earlier. And the good thing is that actually beat the estimate in a Bloomberg survey, which was at 51.3. Now, even apart from just manufacturing, even non-manufacturing, so that's services, that rose even more to 55.9 from August sprint of 55.2, and significantly better than the median forecast of 54.7. So again, even if the recovery is still rather uneven, and of course analysts are warning against that, it still does signal that the momentum should be largely intact. This is according to Citigroup's economists. Improved public health conditions would actually support new orders, in which new export orders may also remain resilient as major trading partners continue to reopen. I'm just very curious to see how, of course, the global markets are faring as we open this last trading day of September. I just want to take a step back and take a look at the US and how that performed overnight. That's down by 0.5% for the Dow Jones and S&P 500. So this was negative ahead of what is ongoing. I was just watching it right before the broadcast, the first US presidential debates between President Donald Trump and Joe Biden, who is, of course, the vice president. Very, very interesting debate there, Jess. But a lot are watching out for that and how that's going to shape the U.S. economy, the biggest economy in the world, of course, just ahead of the November elections. And meanwhile, in the Asia-Pacific region, digesting those PMI figures, it does seem that towards the side of Hong Kong, towards Shanghai and Shenzhen, you can see seas of green, or at least flickers of green there, even as it still remains quite mixed. For instance, in Japan, it's opened with some losses here. But take a look at that. Shanghai and Shenzhen up by 0.3%. Now, recall that the China markets will actually be shut from tomorrow. There's going to be a holiday over in China. And a lot of analysts are saying that the portfolio rebalancing could also exacerbate markets move. Let's take a quick peek at how our own index is doing compared to the rest of the region. Are we keeping in step? We are actually enjoying some gains here. That's up by 0.3%. firming up below 58.50 levels. That's after we had slid by 0.3% yesterday. This, according to Phil Stocks' Piper Tan, the market has been going on a downtrend. We have failed to break back above those 6,000 levels, which has been, of course, a psychological resistance. And it seems that the market will continue this downward performance. Now, this, according to Luis Lamlingan, of course, this reaction was yesterday because of the GCQ, which has been extended in Metro Manila for yet another month. But also, there could be quarter end window dressing. But you can see that some bargain hunters seem to have been swooping in. Value turnovers yesterday was a little above what we've seen in the past few weeks. That was at 5.7 billion pesos, even as foreigners have remained net sellers for 13 straight days. I'm just gonna pull out some airline stocks for you guys here because this is at least some exciting news, especially for those who want to travel. So let's take a quick peek at Cebu Pacific. They said that despite the crisis, they are going to be continuing to be hopeful. They still see an inherent and latent demand for travel. This is according to their Vice President for Marketing and Customer Service, Candice Iyong. They said that they are still well placed to weather the crisis. She says their net debt to equity ratio as of the end of the first half is only less than 2 times. So it's actually 1.9 times, which is still quite low in the industry, allowing them to raise more capital. So she did say that they are going to be looking into more capital raising, but did not disclose any details. Meanwhile, AirAsia is starting to reopen flights over to Boracay. Now, recall that we had reported that already. The tourism department keen on opening slowly some destinations like Boracay, and AirAsia has now announced latest promotional fares. So they're actually partnering with some local, hotels over in the island and have very, very cheap flights. So as low as 8 pesos, Jess, if you can get that deal, you can actually now fly to Boracay. And these are ticket bookings that they're issuing right now. But it's also going to be rather challenging for tourists. If you want to go to Boracay, here's what you need to do. Present a medical certificate issued by any government physician, travel authority pass issued by the Philippine National Police, a health declaration card, which is on the official website of Aklan, and negative coronavirus test results taken within 72 hours, plus, of course, the booking confirmation details. So medyo madami pang gastos then to be able to travel, but at least slowly getting there, Jess.
And definitely those protocols and those measures are warranted, given, of course, a backdrop of a health crisis in the background there. But definitely those deals are a steal. But then, despite the tepid trades, a couple of ambitious companies still think this is a precise time to be raising funds. Tell us more about that.
Okay, so let's kick off with Mega Wide. This was actually a smaller company compared to all of those biggest construction companies, for instance, bidding for the NAIA, diba? The consortium. This is a relatively young company, but they're targeting to grow even more during this pandemic from new shares. So they're targeting an 8 billion peso raising from new shares. That's through preferred shares. So first will be actually 3 billion pesos with an oversubscription of up to 5 billion pesos. They're targeting this fundraising to be completed by November already. Now, this according to their chairman and CEO, Edgar Saavedra, they're seeing opportunities, significant opportunities in both their organic and external pipeline amid the challenges because of this health crisis. So what are they going to be doing with this money that they're hoping to raise? Well, they'll be, using it for the PTEX, so that's in Parañaque, the terminal exchange. They're also going to be using it at some parts of the Mactan Cebu International Airport and also the precast concrete. But also, they're also trying to get that proposal approved to expand or rehabilitate rather Ninoy Aquino International Airport and even a public market over in Cebu. So they're saying we want to take advantage of this window of opportunity for investors who are searching for attractive investment alternatives. So very interesting there. Megawide still saying it's time to be tapping investor interest. Now another one that is looking to still fundraise is Ayala Land. Recall that they had already issued a REIT before, and that's basically raising equity that's sort of like an IPO that's trading in the markets right now. But they are now also keen on more bond offerings. So what they're saying is that they will be looking at more bond issuances to keep their balance sheet healthy and to survive the coronavirus pandemic. So they had already listed 6.25 billion pesos worth of bonds at PDEX just yesterday. And this, according to their chief financial officer, Gus Bengzon, he says they want a fortress-like balance sheet. It's something they obsess over at Ayala Land. So just a heads up to their underwriters now, they have something in mind for their next listing. So again, they've said that it's been remarkably resilient when it comes to local capital markets, even during this period of uncertainty. So very interesting times here, Jess. A lot of volatility, but still a lot of companies that are still very hopeful that their fundraisings will be successful. Now, moving on to the banking sector, this good news for us consumers with loans and payments, diba, that we have to make mortgage payments. Apparently, there's more clarity now on the reprieve that we can get from the central bank. What are the new rules here?
All right, off to some good news here. We do know that Bayanihan 2 has, in a way, really provided for a law, or a measure at least, allowing for a 60-day debt moratorium extension. So that's Republic Act 11494, or the Bayanihan 2. Basically, it waives penalties for late payments and interest on amortization that fall within that period. Now, this time around, you have the BSP, or the central bank, releasing a new memo indicating the implementing rules and regulations for BSFIs, or BSP supervised financial institutions. So more clarity on how that grace period will go about. So for example, if your original due date is on September 19, then there's going to be an extension allowable up to November 19. So say, given that, ergo, if your last payment is on September 20, 2024, then your last payment due date will be extended to November 19, 2024. So basically really just providing for that 60-day grace period. However, past due loan accounts will not be covered. But for those restructured loans, as long as they are current and performing as of September 15, then they will be covered by this new memo released by the central bank.
Okay, so good for consumers, maybe not too good for the actual banks that want their money back. But nevertheless, which types of loans are covered here exactly?
Okay, so a lot of types of credits will be included, basically the whole gamut of here. You have salary, whether it be personal as well, housing is included, commercial loans as well as motor vehicle loans. Also included are financial leases, credit card payments, as well as premium payments. Now, for those paying through post-dated checks and auto-deduct arrangements, the BSFI, or the lender, should coordinate with the borrowers. The lenders, of course, should secure first the client's consent before proceeding. Now, should the lender, the financial institution, extend further extension, then the BSP will give some regulatory relief measures. So you have a number of benefits here. That includes a staggered booking of allowance for credit losses, as well as exemption from loan loss provision, exemption from limits on real estate loans, as well as exemption from related party transaction restrictions, and the non-inclusion of its reporting on non-performing performing loans. And speaking of which, non-performing loans so far have surged by 32.1% to 290 billion pesos as of July. That's equivalent to a ratio of 2.67%. That is the highest in 6 years. And the central bank is expecting that to climb even further to 4.6% by the end of the year as the pandemic takes a toll on the financial standing of borrowers.
And of course, just financial institutions pushing for that FIST bill to be enacted very soon here to help those NPL ratios go down.
Now, here are other headlines we're keeping our eyes on. The government is planning to borrow some 140 billion pesos from the domestic market in October, less than the 160 billion peso program this month. The Bureau of Treasury said in an advisory that it will borrow 80 billion pesos in treasury bills and 60 billion pesos in treasury bonds. Every Monday, the Treasury will auction off 5 billion pesos worth of 91 and 182-day debt papers each, and 10 billion pesos worth of 364-day securities. They are also planning to raise 30 billion pesos from the issuance of 3-year T-bonds on October 8 and another 30 billion pesos from 10-year notes on October 22. National Treasurer Rosalia De Leon earlier said that although cautious, there is high liquidity among investors as bids for government securities continue to increase. She notes that a stronger appetite will remain for short-term and medium-term tenors amid expectations of steady rates from local manufacturers of automotive parts are worried about the upcoming bilateral free trade agreement with South Korea, which could possibly lower tariffs on automotive products imported from the country. The Philippine Parts Maker Association explains the industry could suffer job losses if Korean parts imports compete with locally assembled vehicles they supply parts for. PPMA said more imports of Korea's completely built up units, or CBUs, will translate to lesser production for Philippine automotive manufacturers who are already taking a hit from the pandemic. CBUs imported from Korea currently have a 5% duty under the ASEAN-Korea FTA. Negotiations between South Korea and the Philippines are expected to conclude this year after being stalled by the two countries' failure to agree on reduced tariffs for Philippine banana exports and South Korean auto exports. The PPMA has been lobbying the Trade Department to create safeguard measures and block the importation of CBUs. The DTI, though, has yet to make a comment on the matter.
Now, after lashing out on Facebook earlier this week, Malacanang said President Duterte has no intention to ban Facebook here in the Philippines. Presidential spokesperson Harry Roque came to President Duterte's defense, saying the president only wants to talk and discuss possible policy changes on Facebook. The chief executive slammed the social media giant for censoring after it took down pages linked to government security forces. The lower house, composed of a majority of Duterte allies, said it would investigate Facebook's, quote, partisan action. House Speaker Alan Peter Cayetano, who is Duterte's former running mate, said the probe is meant to determine whether Facebook's action had been detrimental to freedom of expression. Guys, can you believe that it is the last trading day of September? Investors are now repositioning and also reevaluating their outlooks for the rest of the year. Now, here to share with us how he is managing his portfolio, we have with us Manny Ocampo of ICCP. Good morning, Manny.
Morning, Danie. How are you?
Very well, thank you, and good to see you here. Thank you for being back on our show. Manny, let's just kick off, very broad here on what's going on, especially a lot are focusing on global markets as well and how that is, affecting our domestic markets here. Let's kick off with the reaction to the GCQ first, here in the Philippines, and why we saw a pullback of stocks. Now it seems to be recovering. But why was that? Was this not something already expected by the markets? Could we have hoped for anything better, really? And also, even with this GCQ in place, there have actually been a lot of announcements on, companies still fundraising, on airlines still hopeful, on tourism reopening. So why did this not spill over?
Well, I think Metro Manila in particular. Let's look at the Republic of Metro Manila, if you'd like. That is still, I think GCQ is a norm. Any improvement will probably be more positive for the market. It was just a slight movement down yesterday, so nothing to really get worried about. I think maybe, as you mentioned earlier, there were quite a few foreign funds that continued to exit. Maybe that was part of the drop yesterday. No? But we're still we're trading in a band right now, and the band is quite narrow, 5,700 to maybe 6,000 on the high end. There's nothing new out there, and easing, which we hope will happen November, should be positive for the market. We're discounting October already, but November, December should be positive for the market, and maybe it's a time of the year also that if we ease up our quarantine and make it easier for people to travel, it should be good for tourism. Boracay is open already for business, but it's still tough to get to Boracay. I think the government should consider one-stop shops. We fully agree on the move of government to maybe make sure that people traveling are not going to get sick or spread something. But I think they should also make it easier by doing one-stop shops instead of having to go to PNP, your local government unit, etc. Have it all there in the airport or something like that.
Mm.
Do your quick check there, and then that's it.
Manny, is there an increasing optimistic sentiment in terms of whether you believe that the government has now gotten to a place where the pandemic is better being managed and the reopening of the economy, albeit in a more cautious stance, is actually working? We actually saw September having, much less cases than even August, wherein there was a reversal to MECQ. So is there more confidence, so to speak, in the prospects of the economy as the government has been acting thus far?
Well, the government is learning. That's a positive thing. And I think, as you mentioned, the proof of the pudding really is the reduction or shall we say, the easing of new cases coming out. On hindsight, maybe we should have put the face shield requirements,
Before.
2 3 months earlier. I think that has helped quite a bit. But the government is learning. It's something new. Unfortunately, we decide to go our one way as against the others in other countries that have adopted maybe a lot faster with a lot more discipline, for example.
Manny, can you say whether it's been less volatile, at least? I mean, there's a lot of, volatility every time, GCQ announcement or back to MECQ, or every day the cases rising, etc. There would be spikes in the market. And now, like you mentioned, it seems that we're consolidating, we're just trading at a stable band. What's going on here? I mean, is there, less of risk? At least we can predict. I mean, it's going to be a contraction, but at least you can predict that contraction fairly well, na ba?
Yeah, I think we've investors and people looking at the market are resigned that forget to 2020. I mean, this is a write-off year already. But are people looking forward to a recovery in 2021? Yes, of course. So we're looking at people are there already. I think people would investors, shall we say, will take a look at the really beaten up sectors as a first pass. That would provide you with a quick upside if you'd like. Counters that have been hit also. There are laggards in particular sectors, and we continue to track these, shall we say, ugly ducklings, for lack of a better term. But you'll never know. They may turn around a lot sooner than later.
But Manny, when exactly is the time to be entering these undervalued, if according to you, sectors, diba? I mean, right now,
Yeah.
like you mentioned, tourism is starting to reopen. The interest rates have been stopped, and the rate cuts, so to speak,
Right.
are expected to not be happening at least for the rest of the year, next na
Right.
2021. So aren't these things already being digested now? Shouldn't markets start entering slowly? And buying in? What are you still waiting for?
No, I think, Danie, local investors continue to take positions. As you mentioned, you have a lot of net foreign selling. Well, guess who's been buying?
Okay,
A lot of the local guys have been there,
interesting.
out there buying. So a lot of the funds have been out there buying. There's the alternative of a lot of the local funds would be what, 3% bonds.
Wala.
I can get
Oo.
on a good trade. I can get 5% in a week. Let's
Okay.
put it.
Okay, but this needs to be more active trading, Manny.
I don't. Sorry, active trading will probably happen when we start seeing that we've really turned the corner as far as growth is concerned. We expect the third quarter GDP, which will come out late October, November, to still be negative. Hopefully less negative than the one of the second quarter. And if that is sustained in the fourth quarter, then you're seeing a substantially better, you know, recovery maybe in the first quarter of next year.
Okay, Manny, let's talk about one of those sectors that have been heavily hit, and that is the banking sector. We had just reported that another loan moratorium, and that's good for us consumers and maybe good for the economy, but for the banks that had already, been suffering na from rising NPLs, how much more can they take? I mean, to what extent can you say na parang it's already too much? People need to start paying back so
Right.
that our financial institutions don't collapse.
Well, Danny, for the local banks, a lot of the local banks have actually bulletproofed their balance sheets already. You've seen the bigger banks take on provisionings already the last second quarter, so they took hits early on. We like the banks that are taking a more proactive role in that respect. So I think what happened was Bayanihan 2 got passed, but FIST, which is the complementary regulation or legislation that would support banks, is still in Congress right now. So what would have been ideal is both Bayanihan 2 and FIST coming in at the same time. Then the bank, Bayanihan 2 supports consumers, small businesses, etc. But there's nothing that supports the bank. FIST will provide some support for the banks.
But Manny, one HSBC economist had said that the slower lending growth is not about the interest rates. Basically saying that, we're at a record low interest rates and still we're not seeing more lending happening in the banking sector here. Is that
Right.
going to change what's going to change that? I mean, if you have the FIST Act, is that going to change it? Do you actually see a recovery here if the Bangko Sentral might act na naman next year and we continue to be at a low interest rate environment if we keep in step with the Fed, for example, that says baka 2 or 3 years pa, is that going to be okay for the margins of the banks even if they don't have more lending, or are you actually seeing a pickup in lending?
No, the banks have really held back on commercial lending, even consumer lending, Danny, because of the fear that the other side, commercials and consumers, may be challenged on repayments later on. So that has really, shall we say, banks have taken a more, maybe a very cautious, stance that lending out to be more active as far as loans are concerned. We've seen that there. So people are managing their loan portfolios for the meantime. FIST would hopefully help the banks, be a little bit more open to maybe granting new loans. At least they're able to move around for some accounts.
Get some money from that, yeah.
Yeah.
All right, Sir Manny, just right here, let me just jump in very quickly right here. What's your take or what's your outlook here in the property space here? This coming, of course, from the central bank reporting that residential prices actually rose faster in the second quarter. That's up close to 11%, really. So what's your outlook here for the property space? How are things looking?
I think on the property space, the biggest fear, if you're talking residential housing, condos and residential housing, that I think people are just looking at timing as far as that is concerned. People are looking for good deals or waiting for good deals from the property developers. So there's nothing that would want pushes people to do anything sudden right now. So that is there, but is there demand? We believe that there's latent demand still there, and that the property sector should recover next year. No? The interest rates, as soon as the banks start lending again to consumers, you'll see residential housing start to pick up again. Now, office space is maybe something more challenging. We've read the headlines come out about Pogos leaving en masse,
Yeah.
etc. But at the same time, we know that a lot of BPOs are starting to look at the property market, office space again. We may not have the same high prices or inflated prices when the Pogos came in with uh, you know, shall we say,
Mm.
uh, buy at any price type of deals with
Mhm.
property developers. But commercial space at reasonable prices should lease out fairly quickly.
Okay, so banking on that actually recovering the office space, but also particularly on the interest rates and lower actually feeding through towards residential properties, people able to have more consumption power there possibly and getting some loads there. Thank you so much. That
Yes.
was of course Manny Ocampo from ICCP. Thank you, sir.
Thank you.
And that's a first look into the business day. Today is the end of September, September 30, 2020. I'm Danie Laurel.
Catch us again tomorrow at 10 a.m. I'm Jess Delos Santos. We are One News.